Good morning, everybody. It's the 5th of April. We are Signal Centre Talking Ball. I'm Joe, joined by Steve. Good morning, Steve. How are you?
Morning, mate. Yeah, not too bad, thank you.
Excellent. Okay, so let's get into the latest headlines of what's moving markets over the past 24 hours and then get stuck into some charts. Then we'll take a look at the gun to the head trades and hopefully everybody will enjoy it. As always, if anybody's watching and you want some opinions on some charts or some markets that you're looking at the moment, please feel free to post them up and we'll do our best to cover as many as we possibly can. So onto the headlines. There was a slide in the US jobs openings yesterday. The JOLTS data recorded a decline in job openings to 9.9 million for February, well below the consensus forecast of 10.4 million, while the January figure was revised down to 10.56 from the original reading of 10.82. The decline in job openings triggered fresh speculation of a significant easing in labour market conditions. US yields declined following the data, with the US 10-year yield dipping below 3.4%, while the 2-year yield traded around 3.86%. And there was also another shift in the Fed funds rate expectations, with no change at the May meeting now seen as slightly more likely than a further rate hike. So possibly going to start seeing the central banks start to ease up on the rate hikes. There was a significant slide in the dollar yesterday as a result of the jobs data. Another round of selling pressure. Dollar index dipped to 2-month lows. So we'll take a look at those charts shortly. And on the flip side of that, we saw strong demand for gold, with a significant breakout above the $2,000 level to hit 12-month highs. We saw some mixed comments yesterday from the Bank of England. The chief economist Peel stated that there was still a lot of tightening in the pipeline given the policy lags. He also expects headline inflation to fall significantly, but warned over the risk of persistence of domestically generated inflation. The May rate decision would be dependent on the forecast analysis and data flow. One of the other members, Tenreo, stated that looser monetary policy is needed to meet the inflation target. With current rates, there would be a significant inflation undershoot. Overnight, we've seen some central bank action from the Reserve Bank of New Zealand. They increased interest rates by 50 basis points, taking the overall rate to 5.25%. This was above the expectations of there only being a 25 basis point hike. So there's been some significant moves in the New Zealand dollar currencies overnight as a result of that. And today we've got some important US data releases on the job side of things. We've got the ADP jobs data and also the ISM non-manufacturing index. Consensus forecasts are for an increase in US private payrolls of close to 200,000 from 242,000 previously, with a limited slowdown in the ISM index to 55 from 56.3. Okay, that's it for the headlines. Steve, let's take a look at some of these charts, shall we?
Yeah, let's take a look at them. Bitcoin looks a little bit of a messy chart, really, because there's a lot going on in it. We've stalled in front of this major resistance level. I do have a little feeling in my water, Joe, that we are going to punch higher through it, just because we're seeing sort of like those, other assets, like gold, which is like classed as a safe haven asset. And Bitcoin is a funny one. It's a little bit of a risk asset, but sometimes it sort of adopts itself as a safe haven asset when in indice markets or equity markets take a hit. But we're hanging about this resistance level. And we've been doing it for a while now. Although we did do the same sort of thing when we did break down to this level, which was a previous long-term support level, all the way back in May and June last year. And then eventually we did break lower. Are we eventually going to break higher? That's the question. We are seeing price action over the last couple of weeks really just moving sideways. We've got the low of around about 26,500, the high coming in around about just under the 29,400 area. And yeah, in between, it's just, I don't know, it just feels like it's really good. It's going to have that test of the whole of that resistance area, which I would say is up to 32,500. However, even when it gets there, it's still got to take that level out. But so I can see some sort of shenanigans going on over the next couple of weeks. The rest of the markets, cryptocurrency markets, are supportive in that they're taking out these resistance levels. Ethereum, the next resistance coming in on that is at just above the $2,000 level. 1730 was the pivotal area that we had for many months, and eventually we broke up through that 1843 level, or 1860, which was the most recent swing high, and we're pushed up through it overnight. So a really aggressive move higher on the cryptocurrencies. XRP also is having a little bit of a uptick from that 48-cent level, and trading out at 52.14. The resistance we got is around about the 58-cent level. Just above there, we've got a 50% retracement of the most recent down move, which was the high from March 22 all the way down to June 20 last year. And we're pushing back into that area. So nice little correction there. Still a bit of a way to go, but looks quite positive on cryptocurrencies. My overall, all right, I'm going to say it, my overall bias is to the downside, but you have these market reactions and rallies in between. I'll let you have them. Gold is continued the break higher, and it did what we said on the, and what happens a lot of times with these symmetrical triangles. We redrew this symmetrical triangle. It did break out to the downside like a false break, which happens a lot, and then it's exploded higher. So it has continued within this trend, and we are fast approaching the well, what was close to the all-time high in March last year, got up to 2070. The all-time high, which we posted in August 2020, that's up at 2075. And yeah, we're breaking really aggressive. Yesterday was like just a really positive day. It only took an hour to sort of like punch through all the resistance levels that, well, the intraday resistance levels we had at 1990 and 2010. And yeah, we're sitting nicely at 2025. Nothing really looks like it's slowing down on that, and further upside is expected. Just continue to dip by. That's the only thing I'd be looking for trading that. Crude oil has maintained the gap on the charts, this break higher, which was quite significant over the weekend, and we're trading around the previous resistance levels, around that 80.72 level. 82.61 above is the next resistance, and we've got the gap on the chart, which will form a bit of a vacuum. If we do manage to break $79, then it does open up a potential move down towards the $76 level. Brent crude oil, similar sort of price formation. 83.45 is the low of Monday's low. If we manage to get below there, then it could open up a move down to $80. But at the moment, it's looking pretty healthy and looking to target the 86.70 resistance and the 89 resistance above that. Natural gas did this on a gun to head yesterday, and this remains under pressure. Just really looking for this break. At the moment, it's 208's the level, but it seems to be holding on. I think we've got natural gas. What day is it? Is it Wednesday or Thursday today? I think
it's Wednesday.
Wednesday. Okay, we got oil inventories out today, and we got natural gas inventories out tomorrow. So, yeah, maybe we'll see. We'll have to wait till tomorrow for this to check out whether the storage is getting close to capacity, and in that event we should see prices move lower even further. That's about it on that commodity front. If you want me to look at any other commodities, give us a shout, and I'll pass it over to Joe on the FX to go run through that before we go into indices.
Okay, lovely. Thanks, Steve. So let's take a look at the dollar index. As mentioned, it hit a fresh 2-month low yesterday, and we did have some support forming around this kind of region here between 101.90 to 102.15. Broken through that quite convincingly yesterday with a big red candle, and now we are potentially going to go and challenge these lows that we posted in early February down at 100.82. If we scroll over to the left hand side, we can see this was a previous swing low from back in May as well. We did overshoot that level before bouncing fairly aggressively from that level back in February. So we look as though we're going to retest that again, potentially forming a really, really big top here on dollar index, which would be quite negative for the overall outlook. I mean, clearly we are in a downtrend, as we can see here. So it'd be interesting to see what reaction we get between 100.82 to 101.29. and we're fast approaching that today. So very much on the back foot. A breakdown here is likely to trigger further selling in the dollar index. So we're going to see higher prices in euro US dollar, higher prices in sterling US dollar, higher prices in gold. Anything that's linked to US dollar, we're likely to see some decent moves as a result of this, if it does indeed break down. Of course, if it finds support, then we could see some buyers step back in and potentially push this higher, but the overall bias remains bearish for now. Looking at euro US dollar, we can see yesterday we broke through some resistance convincingly. We took out that 78.6% fib level, which has provided a bit of resistance over the short term at 109.21. Broke through that yesterday. Now looks set to go and challenge these previous highs from the 2nd of February up at 110.32. Just scroll out to the left just to see. Obviously, we've got a lot of white space up here that we could potentially move into as a result of a potential break. Clearly, the short-term trend remains pretty bullish, as we can see there, highlighted by that short-term uptrend. So you wouldn't want to back against that at the moment, continuing to move to the upside. Let's take a look at some longer-term targets actually on this as well. So from these highs that we posted back in January 2021, we can apply some Fibonacci levels down to these lows that we posted in September. We've got a 50% fib level, which we're pretty much trading at now, as we can see here in yellow. And if we can get above these highs at 110.32, then we'll be looking to target this 61.8% fib level up here at 112.75. So looking pretty strong there. If we take a look at cable yesterday, a really good move on this as well. There was a big area of resistance here, which we can see here highlighted by these two red arrows. That comes in at 124.50. Seen a decent breakthrough that yesterday. The first closing move above that we've seen for a significant period of time, going back to June 2022. We're holding above it at the moment, and now we're looking to target these previous swing highs up here from May the 27th. 2022, that's up at 126.67. So looking pretty strong there, and no signs of it slowing down. So we're continuing to see dollar weakness and some sterling strength here. So it's looking pretty good indeed. If we take a look at dollar yen, this is pretty mixed as things stand. We did find some support around 130.40, pushed higher, but now pulling back towards that support level again. So a bit indecisive with this market at the minute, potentially forming a large top, which would need to break down through these lows here that we saw in mid-January. What else should we look at? Let's look at some of the commodity currencies. Aussie dollar taking a bit of a hit today off of the back of the New Zealand dollar rate hikes, New Zealand rate hikes yesterday, seems to be affecting the whole region. We can see actually there's some weakness here compared to the US dollar, which is quite interesting. We did break above support resistance at 67.16. We're now getting a pullback into that newly formed support, so it'll be interesting to see if that can hold and we can potentially push higher in line with the weaker dollar outlook. Okay, requests. There was one for Euro New Zealand dollar, so let's take a look at that. This is the daily chart. First of all, we can see prices have been moving higher within this kind of bullish wedge or bullish channel formation. We see prices topped out on the 30th of March, posting a bit of a shooting star candle. We also noted that prices were trading in a bit of a range here in the short term, and potentially now we've broken down through that following the surprising rate hike in New Zealand yesterday, or this morning in fact. So we can see this was the range in the short-term charts. This was the candle that was posted at 3 a.m. this morning when the rate hike was announced, a surprise rate hike. We only expected to see 25 basis points, but we got 50, and we've broken down through this support at 172.72. Now, as things stand, we're still tracking below that level. So we can see this was the previous support in red, and prices are still below that level. And then the couple of attempts that we've seen to try and break above that level, we've so far failed. So maybe as a result of this broken range, we can start targeting lower prices. And if we're to kind of measure the range of where we think prices could potentially go to on the downside, by taking a measurement of that range and projecting it lower, it comes in at around 170.80. So from a risk reward perspective, if we wanted to trade this break, due to the fact that we've got a bit of confirmation that prices are stalling at this level, we could potentially initiate some sales and target a measured move lower, which gives us a risk reward ratio of about 5 to 1 if you've got your stop pretty tight. You may want to go a bit higher, at which point obviously the risk reward starts to be impacted slightly, but it gives you that little bit extra room to try and ride out any potential volatility that we may see. But that would be my bias now, following the break of this range, looking for a move lower. Let's take a look at euro yen. This has been one that we've been following now for a while because we've got this clearly defined trend line here. And each time we've seen attempts at trying to break through, they have failed. And yet again, we saw that yesterday. The breakthrough 144.96 was not sustained, and we posted a pretty sharp reversal candle yesterday. So this level, selling into this, has been particularly lucrative. Every time we've got to that level, I know it's looked a bit scary at times when we've started to see prices break through, but it's not been able to hold, and prices have continued to move lower. So we've seen that yet again here. Now, Lompra is suggesting, where do we look at today for a potential long entry? Well, given that we've got this outlook on the daily, I think my preference is still for lower prices. And therefore, if I'm looking to buy on a dip, where is that going to be? Well, let's take a look at the intraday charts just to see if there's any sort of guidance here that we can potentially get. So we've got this short-term trend higher, which is broken. If we look at the price action now over the last few hours, we can see that potentially we're forming some sort of double top pattern. And the neckline of that pattern comes in at 143.62. So if prices hold that level, then obviously we're going to avoid completing a double top. So if you're looking from an intraday perspective, buying close to that 143.63 level might be a decent plan, looking to target and move back up to this downtrend resistance line or these major resistance levels up here. If this level starts to break down, then we will complete a double top pattern, and the measured move of that target comes in at around 141.57, which actually also coincides with a 61.8% fib level from these lows on the 24th of March to these highs on the 31st of March. So buying on a dip into this kind of region here would be my preference if I were to be looking at some speculative longs. But I think my bias still remains on the downside while we continue to trade below this downtrend resistance line. I'm going to take a look at Euro Oz now, because that's been requested as well. Now, that looked as though it might have been forming a bit of a top based on this candle here that we posted on Monday, a big move to the downside. We have been trading in a very tight range, so that may have triggered further losses. But yesterday we posted a very impressive reversal. We engulfed all of the previous day's losses, and today we are pushing higher again, breaking through this resistance at 162.34. So that's looking pretty strong. And if we look back to the left-hand side, we can see short-term trend remains pretty bullish. We can see here we've got a sequence of higher lows and higher highs. We did complete a nice double bottom pattern here. The measured move of that double bottom comes in at 163.80. So we look to be edging ever closer to that level, and also a previous swing high from back in August 2021. So this is looking pretty strong indeed. No signs of that slowing down at the moment following that big reversal that we saw yesterday. So it is potentially approaching some resistance, so upside might be a bit limited, but it looks as though it's forming some, pretty impressive kind of base features here on the daily chart. So looking pretty strong for the time being. I think that's it. I've looked at cable already, looked at euro yen. So Steve, I'll throw it back over to you, and you can take a look at some indices for us.
Yeah, look, lovely. Thanks, mate. Yeah, I'll look at FTSE first, just to see what happened basically yesterday. Obviously, in the headlines, we talked about this. Quite a nice bearish almost a bearish outside candle. Normally a bearish outside candle, the close would engulf also the previous day's open, or the opposite if it's bullish engulfing. But yeah, we were close to it. But price action pretty negative yesterday. Managed to form a high at 77.27 in FTSE, just shy of a resistance level that we had in there, which I think goes all the way back to July 2019. So, but also it was sort of like it acted as support on multiple occasions in January and early Feb. But also we had this the actual swing low from the 31st of Jan, so the monthly low there, 77.06, which we pierced and then reversed back through. So this looks pretty negative on the top side, and this is prior to obviously the jobs report coming out this week. DAX, similar sort of price action, broke through that resistance level. So a new yearly high on the DAX, got up to 15,739 and reversed lower. Now, after the hanging man candle that we mentioned on Monday, Tuesday now, we've got that shooting star type candle. And that does look like we are forming a top if we take them two candles in isolation. But obviously, along with the resistance levels that we've had before, it could be quite significant. So got a little bit of a bearish tint to it today. The US 30 Dow, that similar sort of candle, hanging man type candle, bearish overall, and at a significant resistance level. So we're looking at we're above the 61.8, but we had the swing high on the 6th of March, and we are stalling at those sort of levels this month as well. Nasdaq, hanging man, and also a bit of a doji candle yesterday, but a sign of things slowing down. We're above the resistance level, which was around about the 12,895 level. 13,000 obviously is a bit of a psychological level, and we're stalling after breaking through that. S&P is probably one of the most interesting one because that did form that bearish engulfing or bearish outside candle, and it formed it at the top of this bullish channel, and it also, again, in line, it's done it at places where we've had multiple open highs, lows, closes, stalls, everything. That was back in February. And also, if we look back all the way to December, we got up to 4141, so which we're trading just below now. So yeah, overall, indices looking a tad negative. Normally we get that turnaround Tuesday. Is it just a temporary thing? Only time will tell. But I might be lining this S&P up for a muck hunter head trade idea.
Yeah, I agree, Steve. These indices did take a bit of a turn yesterday and potentially into some big resistance levels. So potentially some options there. Let's move on to the gun to the head trades then. So this is where Steve and I pick trade ideas on the video as if we had a gun to our head. We come up with them pretty quickly without too much thought or any rationale behind them, but we just go by what we see at that moment in time when we are doing the streams and try and pick a winner. So we both have stops and targets on these ideas. Of course, risk management is essential. Each of us must have risk reward ratios of better than 2 to 1 on these ideas as well. The ideas are closed out at 9 p.m. UK time unless the stops or the targets are hit. And we are trading with a live account on these. So it is all real money on the line. And we're risking 1% of capital each on these ideas. Now, yesterday, after a decent run of late, we come a little bit unstuck. I was looking to sell Euro stocks, hoping for a move to the downside because it was into a big level of resistance, and we were posting this kind of reversal candle at 8 o'clock yesterday when we were speaking. My stop was probably a bit too tight on this one. As we can see, it just jumped through that, taking me out before then moving back on side. So stopped out on that, and Steve was looking at natural gas, looking to as you can see there, horrible downtrend in natural gas, looking to trade in line with the trend. If we click the play button, according to this, Steve, he didn't actually hit the stop loss because he didn't get there.
Yeah, I'm angry, Steve, this morning. That didn't look like I got stopped out, but obviously there's a spread in natural gas, and the spread is pretty wide. So
yeah,
you got to roll with the punches, you know. But
so
yeah, there's a bit
sadly, that was
heartbreaking.
registered as another stop out yesterday, despite the call looking pretty good. But that's the way trading goes. These are things that we need to factor in, and hopefully that's what we're trying to showcase here by doing these live trades with a small account, trying to replicate the struggles that we all go through when it comes to trading with real funds. So Steve, have you got anything lined up today? You've maybe indicated the S&P 500 is something that is going to take your fancy.
Yeah, I think it is, Joe. Yeah, just back up what you said. This is the idea of doing this gun-to-head trade idea is to show you how difficult it is, how maybe you should put more thought into it rather than just trading spontaneously when forced to do so. You shouldn't be forced to trade, and it's all. But we seem to be doing okay or holding our own at the moment. But that's a lot to do with the discipline of it as well. We have a set and forget. We have our strategy is like close trades before 9 o'clock. That's our strategy. We stick to it. We have a computer to do that for us, so we don't forget. We're like, I'm an old man anyway. But yeah, so let's take a look at S&P. Now, the main thing, obviously, as I said, is the daily chart hits the top of the bullish channel, rejects price action, and we've got the bearish outside candle formed, which is a stronger candle than an engulfing candle. So that's negative, and we've seen the stall. So really just on that, and this looks a bit like a head and shoulders formation if you really squint hard, but there's the key support level comes in just below the 4,100 level, and we've just seen in the last hour price action is starting to engulf the previous 7 o'clock candle, which was slightly positive, a bit of a bullish hammer. So I'm going to get on this. Oh, I need to log on, don't I? Come on, let's connect. No, close your eyes. Don't look at my password, everyone. Here we go. Jumping into the live account so that we can trade. I'll get this on as quick as possible. Not that it's sort of like anything's going to happen really quickly, surely. So we got 1% risk, which is risking. We're risking around 1% because obviously we've got a small account. So the stop for this, I'm going to put the stop at 41.15. Start with that, see how that plays out. Yeah, that's a 1%. And target a move to should we target move to that 6-1? Why not? Let's go for it. I'm only risking.
Steve.
Yeah, I don't care, mate. I'm going for it. So I'll leave it there. I mean, the measured move target for this, for me, would be that probably that 44.34. What's that? That's 4.9, 4.5 to 1. I'm going to go for. Targeting a move to 4,034.9. Stop is at 4,115. And yeah, we're on. We're rocking and rolling.
Okay.
S&P.
Good.
I'll put that. I'll get that up to the. I'll post that now. Thank
you. So I'm kind of tempted to go again for this Euro Stocks 50, but Steve's kind of got us covered on stocks, so I might leave that alone and have a look at a currency. And the one that I quite liked was the one that Ali mentioned, who is following us on YouTube. Because we had a look at this, it looks as though it's broken down from a range. We've seen that big move as a result of the interest rate move overnight from the RBNZ. Rallying into the kind of neckline now of this top pattern. Is that going to continue providing resistance? Hope so. And if that is the case, then we've got a measured move target down here at 70.80. So I think I'm going to go with that. I think I'd like to sell euro, New Zealand dollar. So looking for more New Zealand dollar strength and euro weakness. It's currently trading at 172.64. And I'd like a stop at 173.02, just a couple of ticks above the big round number, if possible, Steve.
So let's go again. We're looking at stop at 173.02 and targeting a move to
170.81.
So that's about 5 to 1, is it? 5.5 to 1.
4.7 I've got here.
Let me just check. I'm doing everything right. Getting in at 172.66.
Yep.
67. Yeah.
Yeah. So it is. Sorry, about 5 to 1. You're right.
Okay. Yeah, that's on.
Couple of humdingers there.
Yeah. Go for gold. Well, we're not going for gold. We left gold alone. That looks like it's going higher. And
we should have gone for gold.
Should have gone for gold yesterday. Yeah. Okay. We've got them on, and let's see how they do.
Okay, we'll get those posted up. Okay, day ahead, a couple of bits out today. US ADP jobs data, as we mentioned, that is being well watched as it is going to be a key data point for the Federal Reserve with regards to interest rate decisions. We've also got US ISM non-manufacturing index at 3 o'clock. And as Steve mentioned, we've got the oil inventories a little after that at 3:30. Tomorrow, we've got Canadian employment reports, and on Friday, we've got the US non-farm payrolls. Obviously, it's going to be a shorter week for us because it's Good Friday, bank holiday. On Friday and on Monday as well. So yeah, let's try and finish off the week well with a couple of wins today if we can.
Yep, definitely.
Okay, have a great day, everybody. Thank you very much for watching and participating. We very much appreciate it, and we'll see you all tomorrow. Have a good one.
Cheers.